Greetings. It's good to see you. Come on in. Make yourself comfortable. And let's talk about this week's one big thing. Let's talk about dead cat bounce. What's a dead cat bounce? Well, if you drop a dead cat from high enough, even it'll bounce. And so what we've seen this past week, particularly in corn, is an improving crop. Conditions are excellent. We're way over 80% planted. In fact, we should finish up planting on corn this weekend, and we're going to be way on down the road on beans. Crop's going to get in early. We're going to have plenty of acres. Early development is just looking spectacular. So as we see this bearish news coming in, market sells off, that attracts a little bit of consumer pricing. They stepped in, bought it, scared the funds, they came in and bought some too. And now the market's kind of running out of gas. This corn crop keeps getting bigger from a global standpoint. Brazilian crop, their safrinha, is getting larger and larger. Their corn, Brazilian corn's 50 cents a bushel cheaper than the US into Asia. In China, they're buying wheat cheaper than corn. But you got to remember too that China's economy is barely growing, 2% at best. The hog business is contracting. They're losing about 24 bucks a head right now. So we don't really look for any big surge in demand for feed grains this year anyway. And the weather for the next 2 weeks just looks ideal for corn crop development. Over in the soybeans, it's pretty much the same story. Excellent weather, planting progress is ahead of normal, and a Brazilian crop that just keeps getting bigger. Now, Brazilian beans, they're offered about what, 50 bucks a ton into China, cheaper than US. And US beans, they look like they might get competitive in November, maybe. So we'll have to see. Brazil's got a lot of beans, not much storage, and they're going to push it out as much as they can. So until something changes dramatically, just continue to sell those rallies. And until next time, happy trading.